How to know a property that would deliver high return on investment. Hello and welcome back to Realities of Real Estate Podcast. If this is your first time here, you're very much welcome. My name is Kelechi Ibeako, a real estate expert, a women empowerment advocate, and I am your amazing host on this podcast. On this platform, we don't just talk about owning properties, we talk about owning properties that work specifically for you. So let me start with something very important. You need to understand that not every property is an investment. Some properties are emotional purchases. Some are lifestyle decisions. But in this episode today, we will be talking about how to identify a property that will actually deliver high return on investment. Not assumptions, not hope. I mean real ROI. But first, let's define return on investment. What does it mean? Return on investment means how much your property earns, how much it grows in value, how easily you can exit or leverage that property. If a property cannot do at least one of these well, it is not a high return property. So number one thing is that location creates demand, not just beauty. You see, high return properties are located where people need to live or do businesses, where there are job industries and services exist. Movement and assets are very easy within this corridor. A beautiful area without demand will not grow, and demand is the king. Number two is infrastructure direction, not completion. Mark that. Let me be very honest. Buying after everything is completed reduces your return on investment. High return on investment properties sit near announced roads, along development corridors, and close to emerging hubs. Smart investors buy in anticipation, not in celebration. Number three is accessibility is non-negotiable. If people can't reach it easily, they won't pay premium prices for it. So high return properties have good road networks, good road access, proximity to expressway, easy connectivity to areas, because accessibility drives rental and resale value. Number four is that documentation determines the future value of a property. This is very important. A property with poor documentation may be cheap today, but difficult to resell, hard to leverage, and very risky to build on. High return properties have clear titles, verifiable surveys, and legal clarity, because security of titles protects your return on investment. Then number five, the buyer's profile matters. You need to ask yourself, who will want this property next after I've bought it? Is it attractive to families, workers, or businesses? High return on investment properties appeal to a wide buyer pool. Liquidity is part of return on investment. Number six is entry price versus future potential. High return on investment is not about cheapness. It is about the value difference. A good investment allows room for price growth, development, and demand increase. Now, buying too late limits upside. It limits it. That's why you should buy early. Number seven is development around this property. Growth doesn't happen in isolation. High return investment properties sit where other developers are active, where businesses are moving in, and where population is increasing. Movement signals future appreciation. Number eight is professional assessment. Let me say this with all honesty and very clearly. The biggest ROI mistake is buying alone. High return on investment investors seek expert guidance, verified projection, and avoid emotional decisions. Experience is what helps you filter opportunities. And high ROI properties don't shout, they show signals. If you know what to look out for, you will see opportunity before it becomes expensive. If you want help, identify properties that deliver strong ROI, especially if you're investing from the diaspora and need verified opportunities. AKI Global is here to guide you with insight, structure, and transparency. So go ahead to contact the number on your screen or visit our website at www.akiglobalresources.com, and I'll be very much glad to help you not just to own, but to own smart, to live secure, and to invest with confidence. Now, if this episode helps you to think like an investor, please go ahead to like this video, subscribe to the channel, and share with someone who is serious about building wealth through real estate. And until I come your way again, invest where value is growing, not where it is loud already.